your conference Yeah.
And as a journalist, I have to say I love the title of this presentation. The Pinstripe Mafia, how accountancy firms destroy societies. That's a good headline. The presenter is Mr. Prem Sikka. He is a professor of accounting at the University of Essex. His research on accountancy, auditing, tax avoidance, tax havens, corporate governance, money laundering, insolvency, and business affairs has been published in books, international journals, newspapers, and magazines. And he will talk about the role of accountancy firms in tax avoidance, secrecy and design of tax avoidance schemes, and the global tax avoidance industry. The floor is yours, Mr. Sikka.
Thank you. Thank you, and good afternoon. And I'd like to begin by thanking the organizers of this conference for this wonderful opportunity to not only renew some old friendships, but also hopefully make some new friends too on this very long journey. Please have a look at the AABA website. I'm its director. We were the first creators of the country-by-country accounting standard, which my friend Richard Murphy wrote for us way back in 2003. And there is nothing whatsoever to prevent any of us from developing a complete suite of alternative accounting standards. That was our aim at that time, but regrettably, there are never enough hours of the day. So if you like to help, we can completely develop an alternative set of accounting standards and see. So I'm going to talk about, obviously, accountancy firms. Accountants are very important, as all of you know. So important that they argued amongst themselves about who was really more important, an accountant, a surgeon, or an engineer. They could not resolve the dispute. So being an accountant has its privileges, so they got access to God and said, okay, God would adjudicate. Well, tell us who's more important. Is it a surgeon? Is it an engineer? Is it an accountant? So it was first the engineer's turn, and he said, oh Lord, we are more important. You made the heavens and the planets. They go round and round, and they work in perfect harmony. Everything is in balance. We're just doing your work in this world. That's what we do. We make machines and things. They go round and round, and they work, and that is all there is to it. You know, we are just doing your work. Surgeon said, no, rubbish. He said, look, you made Adam, and then you took his rib and made Eve, and we've been doing body surgery ever since. We are really the more important. We are just doing your work. Without us, there'd be nothing but chaos. And the accountant said, chaos? Who do you think is responsible for that then? So now we come to look at the world of accountants. This pinstripe mafia is kind of an allusion to sharp suits worn by city gents in the city of London. And we have a new mafia in town. It does not actually shoot people, it does not put bullets in their kneecaps, but its trade is just as deadly. It deprives people of opportunities to have healthcare, education, security, justice, and essentially a fulfilling life. Just like the mafia collects its toll from every street, so do these accountancy firms. Their toll, the toll of tax avoidance, is paid by every citizen in every street. Everyone pays for it. Just like the mafia has penetrated the state, accountancy firms have also penetrated the state. Indeed, their rise as tax advisors is based upon a state-guaranteed monopoly, state-guaranteed market of external audit, which is reserved for accountants. Nobody else can do this. The law does not force the sick to consult a doctor or the injured to consult a lawyer, but the law forces certain types of businesses to have an audit. That gives you income. That gives you access to top management. That makes you part of the way capitalism works, or does not work, as the case may be. So accountants enjoy these kind of privileges. And the pinstripe mafia is not based in, if I get this thing right, it is not based in some offshore place, but it has grown up in generally the first world capitals, as Jim Henry, whose excellent work, The Price of Offshore Revisited, reminds us, it is in places like New York, London, Geneva, Frankfurt, Singapore. It is surrounded by complete secrecy. And more on that as I go along. And legislators are well aware. And here's a speech given by a legislator in the UK House of Lords. Of course, I've not added that he's an AABA member. Nobody knows, but now you know. And he says there are armies of bankers, lawyers, and accountants who ensure that even though the letter of the law is respected, increasingly immoral ways are found of perverting the spirit of the law to ensure that tax is avoided. To hide its true purpose, the tax avoidance industry adopts the language of real business. So that is the way they basically play their game. And then he goes on to explain a few details. But people are immediately disarmed about looking at accountants. Oh, accounting is boring, it's technical, it's grey, you won't understand it. That means the legislators, researchers, journalists are all immediately disarmed. But actually, accounting is affecting people's life chances. That is what accountants are doing. It is subverting democracy. We can all elect a government which says, vote for us, we will give you better healthcare, better education, better security. And next day, accountants say, sorry about that, folks. You elected this government, but we actually got a tax avoidance scheme, and the Amazons and the Googles and Microsofts won't be paying any taxes in your jurisdiction. Too bad. You voted for it, but actually you're going to get something else, which you haven't really voted for. So there's a real challenge to democracy itself. Okay? So let's look at who these big players are. These are the 4 accounting firms which are the epicenter of global tax avoidance industry. PricewaterhouseCoopers, who often will lowball audits, and sometimes I call them half Price Waterhouse, because the lowball audits to sell consultancy on its back. You got Deloitte & Touche, Ernst & Young, KPMG, the firm which was private advisor to Colonel Gaddafi, managed his wealth. We heard earlier on about how we go after these kind of people, but nobody's gone after KPMG to say, well, how on earth were you advising Colonel Gaddafi and his family to manage his wealth, sitting in London and New York? So the combined income of these firms is about $110 billion, which makes them about the world's 55th or 56th biggest economy. They have more resources than many of the governments, many nation states on this planet. They have plenty of financial and political resources. In the US, they back the Republican candidate and the Democratic candidate for presidency for equal amounts. They hedge their bets. In the UK, they did the same, though they gave more to the Conservative Party. They provide jobs for former and potential ministers. So accompanying these set of slides is a monograph which is called the Pinstripe Mafia. That should be on his website, on the conference website fairly soon. That gives you all the details. It's about 22,000 words long. You can read lots of background information. So I'm just going to quickly go through it. The monograph also covers the role of the firms in bribery, corruption, and running cartels, and money laundering too. Okay, so I'm only going to talk a little bit about tax here. So I've been looking at these firms for a long time. I've been doing accounting work for 44 years. I started looking at them about 20 BC. BC is before color television, about 20 years before color television. Okay, so that's how long I've been looking at them, and you will see. So they have a vast amount of political resource. Ernst & Young hope that by 2015 they will have 215,000 employees worldwide. There are about 2.5 million professionally qualified accountants on this planet. About 330,000 are in the UK. So Napoleon, who said England was a nation of shopkeepers, got it wrong. It's a nation of accountants, actually. And bright young things don't dream of becoming an astronaut or a real engineer or even a train driver. It's how can I do financial engineering? Financial engineering is not taught at universities. It is learnt within these firms. If you join as a tax advisor, the very first training session would be how to create a structure which nobody can easily penetrate or investigate. That is playing off one jurisdiction against another, as we heard. That is the first training session in the tax. workshops in these firms. So there are, lots of things going on. These accounting firms also control the setting of accounting standards. They provide $1.5 million each year to the International Accounting Standards Board, and not surprising, as we were developing the country-by-country accounting standard, the ISB didn't want to talk to us. They know what we are trying to do. And same in the UK, the Accounting Standards Board said, you are lobbying, we don't want to talk to you. Oh, what do you think the others do? And so there were ways had to be found around of dealing with them. So they control too many things. Okay, the head of anti-avoidance in the UK tax authority is from one of these firms. The newly appointed chairman of Her Majesty's Revenue and Customs, which is a tax authority, is a partner from KPMG. Their partners have penetrated the state. They are running the treasury. And I'll give you some examples of some things they come up with. So what do we know about these firms? Despite enjoying a state-guaranteed market of external audit, the firms are hardly required to publish any worthwhile information about themselves. We don't even know how they are controlled. So Jack would remember this when Senator John Kerry investigated BCCI in the early 1990s, a bank which collapsed under the weight of fraud. They subpoenaed Pricewaterhouse New York, said, okay, we've got to have a look at your working papers. After all, you have a common worldwide name, a common worldwide logo, a website, a common board of directors. You must be the same organization because, after all, when you pitch for audit, you say you're a global organization. But the New York office said, actually, we are not the same. We are actually a collection of national organizations. We are not really global at all, though they say they are global. Well, okay, the London office was approached and said, well, would you like to cooperate? They said, not really. Why not? Well, actually, we are not really in London. Well, where are you? Well, actually, we are controlled by PwC Worldwide, which is in Bermuda. And Bermuda doesn't have any information sharing treaties with you lot, so off you go. Nobody cooperated. That episode's repeated a number of times, though it may have changed now because of the new regulations in the US, but we have to wait and see. So we know very little about these organizations. How much money do they make out of tax avoidance? We don't know. How many tax avoidance schemes do they sell? We know a little bit about them, but not a lot. Again, we would see. So these firms operate from places, so they have more offices than Coca-Cola. They operate from more cities than Coca-Cola. Okay? As the previous slide gives you some number of offices. They have about 80 offices that we can locate in offshore tax havens, which generally do not levy any corporation tax, income tax, don't require companies to file accounts, no audit, but there is an office of a Big Four. As many offices as you will find for McDonald's in these places, really. Okay? And they have work, obviously, in collaboration with banks and law firms. And they have a very elaborate organizational structure to manufacture tax avoidance schemes. That is what the bright young things are paid to do. And as I said, they have basically captured the state, certainly. So here is a statement from Senator Carl Levin's committee. He's saying accountancy firms have moved from providing one-to-one tax advice in relation to tax inquiries to initiating, designing, mass marketing tax shelter products. Dubious tax shelter sales are no longer the province of shady fly-by-night companies. They are big business assigned to talented professions, generally in the country's largest accounting firms. So this idea that we're only responding to the client's needs, that era has long vanished. Within accounting firms, tax departments are profit centers. They are assigned targets to generate revenues and profits. You generate them by dreaming up schemes, and you go to sell it to the clients. People are trained in sales patter, psychological warfare, phoning up a client and saying, by the way, this scheme, if you don't buy today, next week it's not going to be available. Quick, sign up today. And if somebody is not persuaded, you phone again and say, your rival has bought this scheme, and their profits are going to increase by so much. You're going to be left behind. So all sorts of sales techniques are developed. very psychological. This is trained, experienced professionals engaging in this. So accountancy firms have no regard for the public interest. Accountancy firms also have a very nasty history, if you look at them. For example, they appeased the Nazis just before the Second World War. A delegation led by Deloitte went to Germany, thought it was a good business opportunity. They were at the forefront of apartheid, operating that in South Africa. Even post-independent West Indies, they were at the forefront of racial discrimination, saying, sure, you can become an accountant with us, we train you, no problem. First you go and be educated in London. Of course, people couldn't afford to do that, and therefore very few blacks got into big accountancy firms. And if you look at the history, the kind of things they have opposed in the UK, publication of the profit and loss account, balance sheet, audit report, group accounts, revelation of turnover, publication of audit fee, non-audit fee, you name it, they have opposed it. People think these are the guardians of somehow transparency and public accountability. They have never been. I don't know where this image has ever come from. Anyone studying accounting history can see it. It's just imaginary, okay? So these firms basically have no regard for the public interest. Their activities transfer wealth, generally from ordinary citizens to a few elites, generally to capital, and they have to create a demand for their products. And that is what exactly they do, and that is what we have to look at. And they basically sell the idea that tax avoidance is cost minimization. If we are going to succeed in challenging this industry, we have to challenge their language, their vocabulary. Tax is not a cost. Cost in economic theory relates to a factor of production. Tax has never been a factor of production. Tax is simply an allocation of revenue. We can challenge it with an alternative formulation of ideas. We can say, look, if you're going to generate wealth, it requires cooperation. Those who provide finance get a return called dividend. Those who invest human capital are entitled to wages. And then society provides social capital, education, healthcare, and its return is tax. But accountants have found a way, with the silence of the political institutions, to basically capture, collar, aim, subvert what is due to society. And they are saying it is a cost. It has never been a cost. There's no economic theory which backs it up as a cost that I know of. And if there are any economists here, I'm happy to argue the case with them. So in economics, anything which relates to a factor of production could be a cost. In accounting, anything that gets in the way of the expansion of capital is a cost. Workers get in the way, state gets in the way, it is a cost. Cost means it's a burden. It must be eliminated, it must be reduced. So look at the whole language of accounting. It is a cost, it is a burden. We must not use that kind of language. We have to develop alternative language, alternative visions, alternative ways. That is a way of challenging these people. So the basic organizational culture of neoliberalism, expanded by accountancy firms who are simultaneously the beneficiaries as well as the architects of this culture, is that bending the rules to make profits at almost any cost is now considered to be an entrepreneurial skill. The closer you sail to the wind, somehow you're smarter, and you're a media star, and you're in demand. And their ideology, this is a quote from a partner, a firm like ours is a commercial organization. The bottom line is that the individual must contribute to the profitability of the business. Essentially, profitability is based upon the ability to serve existing clients well. No mention of society, no public interest. When I argue this with a Price Waterhouse partner in a face-to-face debate, there was about a couple of hundred people present. His conclusion at the end was to go for me right at the end. When we had to sum it up, he said, Professor Sikka, you never give us credit for anything. We generate millions of dollars of revenues, and we have lots and lots of satisfied clients. What is your problem? And my response was very simple. That's the language of drug pushers and pimps. Lots of satisfied clients and lots of money. Okay? That's no defense at all. The question is, what are you doing that's socially desirable? anybody can make money and produce a satisfied client. Okay, so that is that. So the emphasis basically is on being commercial and performing a service for the customer. That is what people are trained into in accountancy firms. That is what the whole emphasis is. So Christian Aid basically reminding, if people here from Christian Aid, even though I had an input to this, basically saying that these big firms are exploiting and basically generating misery and poverty. In the UK and US, there's a requirement to register tax avoidance schemes, and later on you will see KPMG deliberately decided to ignore it. In the UK, they have a law since 2004 called the Disclosure of Tax Avoidance Schemes, DOTAS, and they are required to file the registration schemes before they market them, but there are lots of ifs and buts, and the law does not fully work as it should, but nevertheless, that is a development. We don't know how much money the countries are losing. The UK could be between 35 and 150 billion, European Union $1 trillion due to tax avoidance and evasion. That's based on an EU press release, not on any economic model. The US Treasury claims anywhere between 345 billion, 500 billion, that's the tax gap, made of tax arrears, tax avoidance, tax evasion, combination of these things. Could be bigger because we keep wondering about what transfer pricing is doing and many other things are doing. So difficult to know. But these are the kind of ballpark figures. Developing countries could be up to $500 billion a year. The total foreign aid is about $120 billion, so it's a lot of money. Whole variety of techniques, many which we heard already. So there's a problem about what do we do about this? What can the law do? Anything that the law introduces, well, within the next few hours, the bright young graduates undo it. And that remains a constant challenge. I'm not aware of any academic in universities teaching students on how to develop tax avoidance schemes. It must be learnt within, generally, the firms. That is where it is learned. In the UK, every year there is a finance bill. About 30 to 40% of this deals with so-called tax loopholes or tax avoidance schemes, and our legislation keeps getting longer and longer, bigger and bigger, for that one reason. Okay, there are about 22,100 tax disputes waiting to be heard by the courts in the UK. Think of the enormous public expenditure. Okay, and the tax authorities, according to a report yesterday, are investigating about 41,000 other cases, adding up to about £10 billion of tax. So, problem. So these schemes masquerade as tax avoidance, but often go to the courts, and the courts declare them unlawful. Means they are basically evasion. Okay? But many schemes simply don't get challenged. So there's huge public expenditure, and the UK government has never ever recovered the cost of litigation from the promoters of the scheme. So that means the taxpayer bears the cost. The promoters are not fined. What have they got to lose? Often there are contingency fees that will contribute towards a court case. If a client is sued by the tax authorities or they reject something. That, again, seems odd. That is how it works. Well, here we are. KPMG are the auditors of some of the companies who've been in the headlines about tax avoidance, but we don't find anything in the accounts about how the companies got to that position. What exactly were the auditors looking? Were they not put upon inquiry when the tax bill did not look reasonable? There's a professional principle of being put upon inquiry. Now, nothing doing there. WorldCom had this wonderful asset called management foresight, which, what is it? Well, it just means that you can sell things in different packages. I can sell you a mobile phone on its own. I can sell you a mobile phone and television. I can sell you a mobile phone and broadband and other things with bells and whistles added. I can put a different logo on it. I can sell you something with the Mickey Mouse cartoon on it, anything you want. It's called management foresight. Now, the management foresight then is created in a company in Delaware. Then the company receives sold to all the other subsidiaries, and they all pay royalties. So KPMG dreamt up that scheme. if you picked up any accounting book, you will never find an asset called management foresight. But it was a nice way of creaming off the revenue. In some countries, it wiped up 80 to 90% of the revenue, never mind the profit. Profit is completely sucked out. Has this kind of practice disappeared? No. Last week in the UK, there was a case involving Ernst & Young scheme, which is for a newspaper, and basically the newspaper mastheads. So when you look at a newspaper, at the top, sometimes there are advertisements. They decided that is an asset. So there's a company which suddenly is making profit, and the company is now worried that the trade unions might demand a higher wages for workers. So the question is, how do you make the profit vanish? The answer is, well, you treat mastheads as an asset. You sell that to a company within to a parent company, if you like. Then the parent company licenses it back to the subsidiaries pay a rent, and the profit is wiped out. So earlier we heard about transparency, so I thought I'd quote you from an email in relation to this case. As it came out, the company director, finance director, contacted Ernst & Young out of the blue. He said, this is a problem we have, this is what we want to do. And eventually the reply was, for a fee, we can significantly lessen the transparency of reported results. So much for transparency and what accountants. For a fee, we can significantly lessen the transparency of reported results. So in this case, there was some 5.6 million pound of tax reliefs were at stake. That basically, you can work out for yourself how many people could have a cataract operation and how many people with that can have a hip replacement. There was another Ernst & Young scheme relating to a pub called Green King. Basically, there is a loan of £300 million, and eventually the issue is how do you arrange it in such a way that somebody can actually get relief on the interest? Well, the loan is within the group. There is no real cash going out of the group. And eventually that is thrown out by the courts too. So the idea that the firms got to register tax schemes has not stopped them from marketing them, and it is resulting in a lot of costs for for everybody else involved. So about half, it is estimated by the tax authorities that about half of the tax income of accountancy firms comes from tax avoidance schemes, and they may be responsible for about half of the tax avoidance schemes in the UK as well, but we have to learn more about them. So here is, this is all based on actual things filed with the courts. So a case of Jason Drummond, the millionaire, they basically designed a scheme so that he would not have to pay income tax on his wealth, and basically creating losses. Again, the case of a timber company and a computer supplies, helping them to avoid tax. I like this one, which is in the Channel Islands. RAL is an amusement arcade. These people come and put a coin in the slot and hope to win something. And completely out of the blue, they never had any contact with KPMG. Somebody phoned and said, we've been looking at your accounts. You realize you could improve your profit by about £4 million a year without doing anything. How do you do this? Well, we have a scheme. Okay, so like in the US KPMG cases, they came and made a presentation. No document is left behind. Presentations are made on flip charts. No traces left behind of any kind. And basically meant that series of companies are set up in the Channel Islands who would now own the amusement arcades in England, 127 of them. So nothing changes about the amusement arcades. Because Channel Island had a special VAT arrangement with the European Union, okay, basically companies based in the Channel Island can trade in other countries, but they were not subject to the VAT. So basically the idea was every pound you put into the slot, 20% of that should be sales tax, roughly. but that sales tax would not be, they said, payable to the government, but you would be able to to reclaim the tax you have suffered on your purchases. That was the kind of scheme. So complete cold calling. Wasn't anybody demanded anything. And they basically dreamt up this thing, looking at the cracks in the European law, and the scheme was thrown out. So KPMG's rotten organizational culture was exposed by the US Senate hearings, 500 tax avoidance schemes on the shelf, and they had decided in writing internally that they were not going to comply with the US laws. They worked out that the profits were much bigger than even if they are caught and the fines they got to pay. And some of those documents are reproduced in a monograph, which would be on the website afterwards, and you can have a look. So they actually sat down and did this cost-benefit analysis. Okay, that's how far they go to work out. No regard for any of the consequences. The firm eventually paid $456 million fine. Some of their partners went to prison, been fined too, but hasn't stopped them. Maybe made them a little bit more careful, but hasn't stopped them. Ernst & Young, been very famous. There's a well-known mobile phone company, Phones for You. Its directors for years and years did not pay themselves in cash. They paid themselves in gold bars, fine wine, perfume, and platinum sponge, and thus avoided taxes. All the government had to do was change the law, and they did. As soon as they did that, Ernst & Young dreamt up another scheme whereby the directors could basically get back to the same position by paying them through offshore trusts. Here is another one. You look at the names they designed for the schemes. So, okay, internally it was called PITA, which stands for pain somewhere. Okay, and it was sold to about 70 major retailers, and again exploiting the kind of VAT. So basically you pay £100 on a credit card, and they were going to say 2.5% of this is service charge. You actually still pay 100, whether you pay by cash or by credit card, but they were going to say this 2.5 is actually a service charge, and therefore kind of exempt from VAT, and therefore you haven't got to pay the VAT over to the tax authorities, and you keep it for yourself. So that is the scheme they dreamt up. There are many others too. Again, number of Ernst & Young partners have also been prosecuted, been fined, gone to prison, but no action against the firm. KPMG, despite admitting criminal wrongdoing, was allowed to continue in business. Got friends in high places, and that continued, that helped them out. So no end to tax avoidance, and they basically continue. PricewaterhouseCoopers is advising Jamaica on how to become a tax haven. Okay, so more tax havens will emerge, and their partner was the president of the local Institute of Chartered Accountants. Again, they've been under the radar of the US Senate Permanent Subcommittee on Investigations radar. They played the game on patent donations. In the US, they come up with the idea that you could donate old patents to universities and not-for-profit organizations. What happened? Suddenly the old worthless patents appear in balance sheets at very, very high figures, so that you could claim a higher tax write-off. So again, that game they kind of played, and again, other sort of cases too in the US. I'm running out of time. So, and a judge in the US case said that PW scheme was a sham, and he threw it out, but still continues. In the UK, a fairly recent case of Schofield versus Revenue, a taxpayer sold a business for a profit of 10 million, PwC charged 200,000, and basically went around, lost a circular transaction simply to create a loss. Again, a judge threw it out. So I'm referring to documents which are publicly available. We don't know what else does not come to the public kind of attention. Here is a wonderful invention in creative accounting. Sab Miller, group revenues 26 billion, pre-tax profits just under 3 billion, and they say they paid a total tax of 7 billion. How could that be? Okay, tell you in a moment. ExxonMobil took out ads in the paper, taxes 99 billion. They said they paid on profits of 36 billion. How could that be? PricewaterhouseCoopers come up with this thing called total tax contribution, so they're adding everything that the business collects. Value-added tax, sales tax, what employees pay in income tax, everything is added up. And said, look at our tax contribution. And in that, we only have one question. Could you please tell us what these companies paid in each country? No, that information they can't tell us. So they market this. And this is published every year for major companies. Okay? This is their response to the public anger on tax avoidance, to say, look how much we are actually paying. So this is kind of looking at that. Okay? So the large companies in the US and in UK are basically opting out of taxes, and this is their response. So the total tax contribution is a man who invented it. The partner is well connected with the UK Treasury. You will find the details in the monograph. So these are the people who are working for the state. So Deloitte and Touche became famous through the Enron schemes, which are still being unraveled, as far as I understand, by the IRS. There was a 2,300-page publication, which was an introduction to tax avoidance schemes by Enron. They're still looking at it. So Deloitte were part of the designers of that, and back home, Royal Bank of Scotland, bailed out by the taxpayers, is also implicated in tax avoidance schemes designed by Deloitte. So despite a lot of public exposure, these firms are not really put off from designing tax avoidance schemes. It just continues because it is part of their trade, and we have to challenge it. So Vodafone's been in the news, MG Rover, Deutsche Bank, didn't want to pay income taxes on the bankers' bonuses. So bankers are happy to be rescued, but actually don't want to pay the income taxes, and Deloitte stepped forward and designed a scheme, pay them through offshore. Glencore has been in the news, Global Witness people will tell us more about this, and so it basically goes on everywhere. So major firms are not what they claim to be. They don't serve the public interest, they don't serve the social interest, they are not very transparent about anything they do, they are not accountable. Okay, so we have to ask some big questions about them. Their culture is to make money. Fines and prisons are just another business cost, which you have to factor into it. It does not stop the business. It's just something you've got to take into account. Okay, that is entrepreneurial capitalism. Lots of graduates work for them, and basically they are busy damaging the citizens' right to decent public goods, supply of public goods and life, and they are also damaging democracy. So we need to investigate this pinstripe mafia. At the very minimum, there should be no public contract for anybody selling tax avoidance schemes. That includes accountancy firms, but they get a large amount of revenues from the state. Maybe we should be licensing tax advisors, and those whose schemes are thrown out by the court then lose their license. They can't practice. They can't earn a living. But at the moment, that does not happen in the UK. Why give their partners the benefit of limited liability when they are damaging the society? Say, right, sorry, no limited liability of any kind for you. Go back to the old-fashioned partnerships rather than the limited liability partnerships. Make them disclose the money they make from tax avoidance schemes, fine them, make their files available to the tax authorities straight away so that people can see, rather than years and years of protracted litigation. Point made earlier about the corporations of the tax returns of all corporations also to be made publicly available. But I'll leave you with this thought. Okay. Okay.
Yeah, I think we could have a question or two.
Thank you.
From the audience. State your name, please.
Thank you. My name is Olusegun Rotimi, also a fellow of an Institute of Chartered Accountants. And I thought we could clearly see a line here that these audit firms, it is not their duty to prepare the accounts. As a matter of fact, by law, the board of directors are responsible for the accounts. Number two, it is the responsibility of the tax revenue not to take ordinary paper, because in Nigeria, we have issues to put audit firm under lock. Now, these entities, big entities, is there nothing to pinpoint one or two of them? You can't lock up the firm name because it's a partnership business. I have a firm. But what the law recognizes is me and my certificate, not the name of the firm. It's not a public quoted company. So if we are talking of Deloitte, we are just talking of name. Mm-hmm. The law is looking at the people behind it. So the partners, the managing partners, the senior partners, those are the people the law should put in prison. If they do a lot of that, then people will learn to do business in the right way. And I think instead of you emphasizing the name, Deloitte, Pete Mewick, let's look at the culprits. Because if we don't look at the culprits, we'll be misleading ourselves. The law can't ban Pete Mewick. It's a partnership business. And the law recognizes those who are behind it. So I thought you need to tell us more about these partners and what is the law doing about them. And has there been any managing partner, senior partner, that is dwelling in itself? If there's none, then what can we do? And how can we be involved to make our case? Thank you.
Thank you very much.
I'll respond very quickly. A number of their partners, especially at KPMG, Ernst & Young, have gone to prison in the US. But that has not stopped this trade. It has simply become just another factor to consider. The big issue, the issues we are looking at are also systemic. There is nobody that I have ever met who's got a genetical structure. There's something in a genetic structure to say, by the way, you must do a bit of tax avoidance, you must do a bit of bribery and corruption. There's nothing in water that we drink that makes us do these things. These things are learnt. Therefore, attention has to come back to the kind of institutional structures and value systems. Okay? So in that sense, by all means, if we can chase the individuals, but that won't solve our problem. It's changing the whole value system, the institutional structures. That is what we have to do. How can we change it? Well, we're doing it here. Firstly, by talking about it. Secondly, identifying some of these problems and the damage and say, look, what you think is a narrow relationship between you and your client is actually not the case. Everybody else is affected. Yeah? If everybody else is affected, then we have rights. So we have I would like to, why not subject all corporations and big accountancy firms to even freedom of information laws? Let us find out what on earth they get up to, what kind of contracts, what is behind them. We can withdraw, as I said, the benefit of any limit on their liability. Why do we give them these benefits? For what reason? They haven't earned it. What is the quid pro quo for society for giving this? What are we getting in return? Same for audit. I think audit is probably one of the biggest public frauds of all time. Reassuring the public all is well and it's nothing of a kind. And that's gone on for years and years and years. And we haven't learned anything from that. And I think in the case of banks, why not get the banking regulators to do the audit? Who do you fear more? The public regulator or the regulator for the private firm? When you come through the airport, your passport is audited. You fear somebody might not let you in. If the public tax collector lands on your door, you fear that more. We fear state-funded independent regulators, auditors more. Nobody fears the neighborhood-friendly auditor from Ernst & Young who's come to do the Lehman audit and say, by the way, there's something called Repo 105. Let's have a chat about this. Nobody fears them. So I think audit itself has become one of the biggest frauds of all time, and it is. But that's another conference, another day.
Another conference, another day. Okay. Thank you very much, Mr. Sikka.
Thank you.